Okay, everyone, now let's start the revision of one of my favorite standards. The students also know that going concern is one of the best standards to learn. Okay, now let's understand this standard here. This is your SA 570. Okay, now in CA Inter level, what kind of questions can be asked in this? Let's explore that. Okay, let's start. Please here. First is going as an introduction, in which I had taught you all in the class and I had told you why going concern is so important. Because normally the balance sheet of the company will be made on normal cost basis, correct? No. But if the company is not a going concern, in that case, it will be made on NRV basis, net realizable value basis. You understand the magnitude with which the figures will change. Imagine if you are showing machinery at cost at let's say 4 crores minus depreciation, let's say around 1 crore. So outer column will be 3 crores, correct? But suppose this is when the company is a going concern. But if suppose a company is not a going concern, in that case, suppose the market value of the machine or the net realizable value of the machine is only 40 lakhs. So if the going concern assumption is not valid, in that case, you will have to show that machinery at the value of 40 lakhs. So that much amount difference can happen. That is why going concern becomes a very important standard here. Okay. Now let's go to the further questions. Now, the management of the company has a duty to do the assessment of going concern, for which management will consider some factors. Okay. Now, what are these factors that we will see? Wait for it. This is question number 2. Suppose if it is your business, and if I ask you, what all will you think about regarding your business to tell whether your business is going to continue as a going concern or not? So, as a businessman or a businesswoman, what will you think regarding the business? That is basically factors that the management will consider, factors the management will consider for its assessment of going concern. Understanding the matter? Okay. Question number 3. What is the objective of the auditor in this standard? What is the goal of the auditor? The goal of the auditor is very simple. What the management feels about going concern, that is our first left hand here. What the auditor feels about the going concern of the company, that is a second hand here. If that matches, no problem. They are saying they are going to continue the business. We also feel they are going to continue the business. So no problem. Infosys Limited doing very well. So they are going to continue the business. We also feel they are doing very well. There is no chance that the going concern might get affected. So in that case, you understand if both are in agreement, then no problem. But suppose if the management is over optimistic and management says, we are going to continue as going concern. We say, how will you continue as going concern, boss? So much bank loan is there on your head. How are you going to pay it? We feel company is not going to continue as a going concern. So they feel they will continue. We feel they will not continue. In that case, the auditor has to report the difference. Okay. So you understand that is the objective of the auditor. Again, we'll do this answer. I'm just giving you a small briefing here. Fourth one, evaluating the management assessment. Whatever assessment the management has made, we are evaluating that. We are checking that the management's assessment is proper or not. Okay, so what all points will you keep in mind for assessment? That is given in this answer. So wait for it. Next, what are the events or conditions that cast a significant doubt regarding going concern? What are the indicators because of which you may feel that the company may not continue as a going concern? Now, my dear students, you know this song. This is our Jeene Ke Hai 4 Din song. We'll sing that. But in this, they have covered financial indicators, operating indicators, and other indicators. So they have covered these 3 indicators. Okay. You need to know the entire answer also. You need to know these 3 indicators separately also. Okay. Can we go further now? Next is, what are the further audit procedures the auditor should do? What are the examples of further audit procedures the auditor should do when the auditor has identified events or conditions? So if you find that something is wrong in the company, what are some examples of the actions that you may take? That is basically question number 6 for us. Okay. Suppose if the company is genuinely in a tough situation, then what are the additional audit procedures you will do to know the management's perspective? So what are the additional audit procedures? In case events or conditions are identified that may cast a subsequent significant doubt that the company may not continue as a going concern. Okay, so additional audit procedure is a separate question. What are the disclosures the management should give? That is question number 8. And what are the implications in the auditor's report? That is question number 9. Like that, this entire standard has 9 areas. Again, I always tell, if you know these 9 areas, then you are a master in this standard. We do for our entire auditing subject the same thing only. No, we take an area, we jot down all the questions that can come regarding that area, and that becomes our boundary. So regarding going concern, this is our boundary. These 9 questions, it can come only from if a going concern question comes, it has to come from one of these 9 areas only. Okay. Now let's start with a quick recap, quick revision. Let's start with it. PCR. Introduction I already have given. So let's go to question number 2 now. Management assessment of going concern factors. Okay. So now let's go here. See this. Factors relevant to management assessment of going concern. What is given here? So my dear students, you know this is your favorite. This is your Econaco. Okay. What is Econaco? Let's see this. So suppose if I ask you about your business, is your business going to continue as a going concern? So what will you think of? You will think of the past of the business, the present of the business, and the future of the business. Correct? You will think from these 3 angles only. Correct? So regarding the past, you will think regarding the businesses, Sikonaco. What is Sikonaco? Size, complexity, nature, and condition of business. You will look at. You look at the information available at present, based on which you will make judgment about the future. Correct? Based on which you will make the judgment about the future. Easy. And the third, the more into the future you think, the uncertainty degree will increase only. I'll give you an example. If I ask you, will India win the 2060 World Cup, 2060 World Cup? You'll say, sir, 2060 World Cup? Sir, we don't know whether we'll be there in this world at that time. Correct? All these questions will come up. Do you understand that if I ask what further into the future, the uncertainty degree will increase? Correct? No. But if I ask you, does India have a chance of winning the 2026 World Cup? Now you will say, sir, this is very nearby. Or suppose 2028 World Cup or 2027 ODI World Cup is there. If I ask you, will India win that? You will say, sir, chance is there. We have decent team. You may say like that. Why? Because you know which kind of players are going to play that World Cup. So the uncertainty degree will increase. Hence, if it is more into the future, hence, whenever the management makes any kind of estimation about the future, they have to always specify the period. They have to specify the period. Example, we are giving a forecast for 2026, 27, 28. They have to mention that period. So people will come to know, okay, they are giving the forecast for this period. Okay, simple. Go for it, tell me. Management's assessment regarding going concern, what factors will they keep in mind? They'll keep in mind past, present, and future. Past is Sikonako. Your present is, you will take the information at present based on which you will make the judgment about the future. And regarding the future, they have said here, uncertainty degree will increase the more further into the future you think of. Hence, it is important for the management to specify the period. Very comfortable? Okay. Let's go further, please here. Next is, what is the objective of the auditor? Very simple. As I told you in layman terms, what they say, what we feel, report any difference. What they say means what the management is saying, what we feel, what we genuinely feel regarding going concern, and then report if there is any difference. Okay. So let's look at this answer here, please see here. What they say, what we feel, report if there is any difference. What they see means what we are looking at, the appropriateness of the management use of going concern basis. We are looking at this. What we feel is based on the audit evidence obtained, whether material uncertainty, big doubt, material means big, uncertainty means doubt. Big doubts exist related to events or conditions. So we are looking at whether there is a big doubt. And finally, report if there is any difference is there. Report if any difference is there. Are you there with me? Yes or no? Comfortable? Tell here. Okay. That is basically our question number 3. This is auditor's objectives, okay, regarding going concern. Let's go further. Let's do question number 4. Evaluating management assessment regarding going concern. Let's do this properly. Now, I hope the students you realize that we are taking a marathon session. So I cannot go into in-depth teaching. Audit entire portion is around 100 hours, which I take. And in crash course also, if we do, it comes to around 60 hours, 50, 60 hours. I hope you understand when we complete the entire audit syllabus in 10 hours or 12 hours, you understand that the compression of the explanation will have to happen, okay? And this is in any case a marathon session for revision purpose, okay? So I hope it is being useful for you. If you like such videos, ensure that you are typing in the comment section and also writing what you liked about this video. It really motivates me and my team here to ensure that we are able to deliver more lectures for you, okay? So let us know, we'll be very happy. Can we go ahead now, please here? Now, evaluation of the management's assessment. What will the auditor evaluate first? See, it is not the auditor's responsibility to rectify if management has not done the assessment. If the management doesn't do the assessment, it is a wrong part on the management side. Imagine if lakhs of shareholders are giving you money. You are the management. And your company is not doing well, it may not continue in the future. Don't you think it is your basic decency to at least inform these lakhs of people that, see, our company may not continue. If the share price is still decent enough, you can please sell your shares. We are not telling them to sell the shares. At least we should inform them that the situation is not good. That is a basic decency you should do. So if the management does not do the assessment, management has not done the assessment, it is not the auditor's job to rectify it. First of all, that. Okay. Second, management's assessment will not be detailed if the company has history of profits. Imagine an auditor doing the management going concern assessment for Reliance Industries Limited. Now you only tell me, hand to heart, you only tell me. Will the auditor do in-depth assessment whether companies are going concern or not? No. Auditor has also attended the wedding of Anand Ambani. He also saw the kind of delicious food that was served and the amount they spent in the wedding. Looking at that only, the auditor will get satisfied. No, everything is going good in the company. No problem with Reliance at all. So you understand here that if the company has history of profits, then the management will also do very less detailed assessment regarding going concern. Even our assessment will be not in, it will be surface level assessment, correct? No. So see, management's assessment will not be detailed if company has history of profits. In this case, auditor's evaluation also will not be detailed if other audit procedures are sufficient to conclude the management's assessment. It means we have got other evidence to tell us that the company is doing relatively fine only. Okay, there is no problem with the company. Last, I normally expect the management to do the assessment of the next 12 months. But if the management does an assessment of, let's say, 3 months and they give us, then will you evaluate the management assessment? The answer is yes. But you will request them to please make the assessment for 12 months. So see what they're given. Auditor's evaluation will cover the same period that the management has covered in its assessment. If it is less than 12 months, then auditor shall request assessment of 12 months to be made. Are you there with me, yes or no? Very, very simple. This is question number 4. Auditor's evaluation regarding the management's assessment. Okay. Let's go to the main base diagram, base chart. We have completed question number 1, question number 2, question number 3, question number 4. Now question number 5, my favorite. This is basically your events or conditions that cast a significant doubt regarding going concern. Okay. In this, we have financial indicators, operating indicators, other indicators. I'm giving a disclaimer. Many students, what they feel is looking at our songs and everything. They feel, oh, Kartik sir only does songs only, no teaching happens. But a student who sit in the class, they know how much in depth we go into the concept. The way we had done materiality or control, risk circuit, control circuit. Our students know the kind of in-depth, explanations I get into. So students who are not my students watching this video, just to tell you, Just because we have learned the smart memorizing technique like a song doesn't mean that this answer is not explained in the class and I just simply tell the students ki chalo we'll do a song and you just do this and you go to the examination. You also understand students in the class are also very smart. They also analyze a teacher not purely on the memorizing techniques but also on the explanation. Correct? No. Can we go ahead now? What are the events or conditions that cast a significant doubt regarding going concern? We have financial indicators, operating indicators, and other indicators. Okay, let's start. In this we did a song, our favorite song called Jeene ke hai char din. Oh, baki hai bekar din. There was a movie called Mujhse Shaadi Karogi. Yeah, it had Akshay Kumar, Salman Khan, and Priyanka Chopra. It was a very nice movie, very jovial movie. You should watch it. Nice, good, fun movie, relaxing movie. In that movie, there is this song called Jeene Ke Hai Char Din. Okay, so it has a very catchy tune. So we take that tune and we have our song here. So let's start. Please hear. Net liability or net current liability position, fixed term borrowings, approaching maturity, short term borrowings to finance long term assets, indications of withdrawal of financial support by the creditors, negative operating cash flows, adverse key financial ratios, ta 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 ta, management intentions to cease operations, loss of key management, loss of KLMFS, labor difficulties, shortages of supplies, highly successful competitor, regulatory cross-spending changes, uninsured, underinsured catastrophes. It goes in this flow. Okay. Song as a method works when you continuously sing it. Students in the class know very well that at the end of every day in the class, we sing the song always. But the students who are seeing from outside, just because I sing a song doesn't mean I have a wand with me and I've done some magic on you. It doesn't mean that. Doesn't mean that if I sing the song once, it will be there in your mind forever. No. But you have to listen to it continuously. If whenever you come to this revision video, please just bookmark mark this video, the song where it is starting, so that you can start this video immediately, go to that particular minute and second and sing the song along with me. Do this every day for around 7 to 10 days. After that, you will not need your notes also. All the key points you will be able to sing very nicely. This question came in the May 2025 examination. And my students were very happy after the paper. So this question came. Okay, can we go ahead now? Okay. Now this is basically event or conditions that cast a significant doubt regarding going concern. So we have done question number 5. Question number 6, again a favorite. This is, what are the examples when events or conditions are identified? What are the examples? Let's see one by one. First is, this is our 4 friends near river story. Okay. So I'm going to tell you all the story once again. Hear me out. And then after that, we'll look at all the points. Okay. There are 4 friends who go near the river area. They bunk college and they are chilling near the river area. Out of that, one friend is a very studious friend. He talks about latest happening, this, that, latest information he will give regarding new news, this war, that war, this cricket match, that cricket match, all these things he will talk about. So others gets bored with this friend. Full time he's just giving knowledge about this thing, that thing. So the other friends tell this friend that, hey, you now keep quiet. You remove your dabba. Your amma sent dabba, no. Remove dabba. We'll have nice idli. We'll have. So the studious guy, he opens the dabba, and all these friends are eating idli out of the dabba. They sit and eat idli for 1 hour. Okay, slowly they're eating idli. They're talking and all. They're pulling each other's legs. Okay, typical boys group. Boys will understand this. When 3 or 4 boys meet together, the only thing is roasting each other. Correct? No. So they do that near the river area. Now what happens is, after they eat the entire idli, one entire piece, entire idlis which are there, one of them wanted to become a lawyer. So he really feels, what am I wasting my time with these boys? Let me go and study and be something big in life. After eating idli, he remembers that he was to study also. He goes towards his college. He's doing a law course, correct? So he goes towards his college to become a lawyer. There he sees that parents are there. These four boys, their parents are there. So boy one's father, boy two's father, boy three's father, boy four's father, all are there. So this boy who went to the law college comes back running and informs a friend, see, each of our father is here. So now the father also come running behind this boy, and now near the river area, boy one is standing in front of his father, boy two is standing in front of his father, boy three in front of his father, boy four in front of his father. Boy one's father tells him, "What you are wasting your time like this? You are doing time pass here and there. You are bunking college and sitting near the river area." So boy one tells, "Appa, very sorry, Appa." But boy one's father tells, "See, you have left my dream unfulfilled, unfulfilled." Okay. Boy two's father looks at him and tells him, "See, we have taken borrowing from bank, loan from bank we have taken, and you're still doing all this time pass." Okay. Boy two also feels very, ashamed. He tells his father, "Appa, very, very sorry." Boy three father uh, doesn't believe in all these wordings and all. Boy three's father tells him, "You meet me later, I'll give you action. We'll play Kung Fu Panda together." Okay, no. So boy three's father tells him, "You meet me later, I'll give action." Okay. Action means you understand, no, beating basically. Boy four's father tells that boy nothing. Boy four looks him in the eye and he doesn't believe in taking action later. He kicks the boy in the river only. Go swim and come in the house. So this is the story. Okay. So tell me the story once again. Let's quickly recap it and then do the points. Do it. First, four boys go near the river area. One boy starts giving the latest information. The other boys get bored, ask him to open the dabba. In the dabba, there is idli. Idlis, lot of idlis are there. The four boys eat idli, and after 1 hour, one boy after eating idli, he realizes that he wants to become a lawyer. He goes towards the law college. There, he sees that the parents are here, father is here of each of those boys. So this boy comes running. Behind him, fathers also come running. Now each boy is standing in front of his father. First father says that you have left my dream unfulfilled. The second boy's father says that um, we have taken borrowing from the bank, still you are doing this time pass. The third boy's father says that you meet me later, I'll give you action. And the fourth boy's father says that doesn't say anything, kicks him in the river only. Okay, keep the story in the mind. Okay, and I'm pretty sure that in your mind some mental image has come up regarding boys and the river area and all. Okay, so keep that image in your mind because that will really help you to do this answer. I want you all to come to this point here. Hear me out. First, you have to connect. So what are the examples of audit procedures when events or conditions have been identified that may cast a significant doubt on the entity's ability to continue as a going concern? So what are the events or conditions that are there? Let's do one by one. First is with river, no, you'll remember the word flow, correct? No, river flow. And with that, you'll remember cash flow. So boys are chilling where? Near the river area. So river, with that, you'll remember flow. With that, you remember cash flow. So you will say cash flow, profit, other relevant forecast. Tell me again. Cash flow, profit, other relevant forecast. Yeah. Second is latest available interim financial statements. The boy gives the latest information, correct? No, so latest available interim financial statements is what our point will be. You have to connect little bit. The other boys tell him, you open your dabba. With dabba, you'll remember debentures. Okay, no, debentures. So you remember something called as debentures and loan agreements. With dabba, you remember debentures and loan agreement. Okay. They sit and eat for how much time? 1 hour. 1 hour is how many minutes? 60 minutes. So with that, you'll remember minutes of meeting. You'll remember minutes of meeting. Like that only. Then one of them wants to become a lawyer. So we have a legal counsel. So just we'll say the point inquiring with the entity's legal counsel. The boy who wants to become a lawyer goes towards his college. There he sees that parents are here. So EC, the related and third parties are here. So remember related parties, which are parents, are here. Then boy once father tells him, you left my dream unfulfilled. With that, you will remember unfilled customer orders. Unfilled customer orders. Boy two's father tells him that if you have taken borrowing from bank and you are doing this time pass, so that is your borrowing facilities. Okay. Boy three father tells him two things. Remember, 2 points are here. You meet me later and I'll take action. You meet me later means subsequent events and regulatory action. Regulatory action is action basically. Boy four's father uh, kicks him in the river only. That is planned disposal of assets. Planned disposal of assets. Like that, the points will go. Okay. Now, I'm just going to help you with little bit understanding of this, even though the revision session, I'll still help you out. I want you all to connect the points. See, in events or conditions that cast a significant doubt, no, my dear students, you are looking at this indicators. What may go wrong? Example, you can see here a point called negative operating cash flows. Correct? No. So if you see negative operating cash flow as an indicator, then what should you do? The auditor will do this action. See, he will analyze and discuss the cash flow, profit, other level forecast, because that is the indicator is getting that something is wrong. So we'll do more work on that matter. Correct? We'll take few more examples for you to understand. Please see here. Suppose if there is a pending, see this point, pending legal and regulatory proceedings are there. This is there. Pending court case is there. In that case, if this is there, then the auditor may do an inquiry with the legal counsel. Correct? So I hope you understand. I'll show you one more area so that it is easy for you to understand. Let's do this one. No, let's see this. Suppose there is a loss of major market where the company is selling the goods. There is a big loss of that. Where the company was selling the goods, now the company is not allowed to sell it there. Some restrictions have come in. Now this happened after the balance sheet date. So you understand here very well. In that case, the auditor will check the performing audit procedures regarding, see, subsequent events. He will do. So I hope you understand. All these are points which are like that only, which are basically the examples. Look at the question. Examples of audit procedures when events or conditions have been identified. So something you will identify in the earlier answer, and in this answer, you will take some action. Are you there with me, yes or no? So in the class, we had done this as 4 boys near the river story. This is that story. Are you there? Yes or no? Comfortable till here? Can you go ahead now? Okay. Next one. What are the additional audit procedures when events or conditions are identified? What are the additional work that the auditor should do? First of all, the auditor should ask for management assessment whether it is done or not. If it is done, then a management plan will be there in place. If it is not done, then the auditor will request them to make the plan. If they make the plan, then plan will be there. In that case, this arrow should have been from here. One second, now there is a slight error. This arrow should be from here, from management plan, not from cash flow forecast, from management plan. Whenever the management gives a management plan, the auditor has to ask two things. Does it improve the situation and is it feasible or not? Improve means, suppose there is a big loan on the company's head. The management decides to sell few of their machines and pay a part of the loan. Does it improve the situation? And selling the machines, is it practical or not? Is it feasible or not? Does it make sense or not? That is what we are trying to see. Okay. Next is we are looking at the cash flow forecast, the cash flow position that the company is forecasting regarding the future. We will check the reliability of the cash flow forecast and whether adequate support is given or not. Adequate support is given or not. We will also take the written representation of the future plans and the feasibility of it. We'll take the written representation, means everything in writing. Okay. And last but not the least, since the previous management assessment, since that time till now, we'll consider all the additional facts that may happen. So are there any additional facts that we need to check? That is what we'll see. Are you there with me, yes or no? This is question number 7, that is additional audit procedures regarding going concern if the auditor identifies any event or condition. Clear to understand this part here? Okay. Now let's go to the next one. Please here. Now this is a very nice answer. Very superb answer. This is regarding management disclosure. Okay. Management disclosure means what? See, ideally the management should openly disclose regarding going concern because they have to tell the truth to the shareholders. There are two levels which you have to work in this. First is event or condition there? Is there event or condition? Second, is it leading to material uncertainty? There is a big loan that the company has to pay to the bank. So they have to repay the loan. They have not yet done so. So event or condition is there. That is non-repayment of the loan is the event. Is it leading to a material uncertainty regarding going concern? Big doubt. Material uncertainty means big doubt regarding going concern. So the auditor is asking, is the event or condition there? The answer is yes. Is it leading to material uncertainty? The answer can be yes or it can be no. If the answer is no, it means big loan is there on the company's head, but company will be able to pay it easily. There is no problem. They can sell a few machines and they can pay it. But still the management, should they give a disclosure to the shareholders? The answer is definitely yes. So auditor will evaluate whether as per AFRF, FS contain the required disclosures or not. That is what the auditor is checking. Okay. Second, if material uncertainty is there, this was a case where material uncertainty is not there. In this case, material uncertainty is there. So there is a material uncertainty, big doubt that the company may not continue as a going concern. In that case, management has to adequately disclose. They have to clearly disclose. What should they adequately disclose? The event or condition. They should tell openly, big loan is there. We are not able to pay it, like that. Plus, they should disclose the management's plans to deal with the event or condition. Easy. They should clearly disclose the material uncertainty. And they have to mention the fact that they are unable to realize its assets and their liabilities in the ordinary course of business. It means that they cannot continue showing on cost basis. They will have to show everything on NRV basis, as I told you. Simple to understand this area. Okay. There's your adequately disclose and clearly disclose. Easy. Last but not the least, that is auditor's report. So what are the implications of going concern on the auditor's report? Let's do one by one. I want you to hear this piece here. Management says they are a going concern. Auditor says that they are not a going concern. Company is not a going concern. In that case, the auditor will simply give an adverse report because opinion is only different. What they feel, what they say, what we feel, there is a big difference. In that case, we'll give an adverse report. Easy. Case 2. Company says that they are a going concern, but material uncertainty is there. And two things. Management gives a proper, honest, heart-to-heart disclosure about it. They tell about everything. In that case, the auditor will first of all appreciate the management because even though the company is in a tough situation, the management has been very open and they are informing the shareholders, see, this big problem is there. It's a good thing. In that case, the company must have given the disclosure, means they have given the disclosure in the notes to accounts. Let's say they have given note number 23. So they have adequately disclosed. So in this case, the auditor will give a clean report or unqualified or unmodified report, means the same thing. Okay. Then in the audit report, the auditor will open a paragraph called material uncertainty in relation to going concern. This paragraph. And in this paragraph, the auditor will write there that please go and read note number 23. Auditor is telling the shareholders, please go and read note number 23. Management has given an important disclosure. But the auditor will worry that the shareholders should not take this auditor's concern that please go and read that notes to accounts. It means that the auditor is scared that the company may not continue as a going concern. The auditor wants to relax, help the shareholders to relax. So auditor is telling the shareholders, see, material uncertainty is there regarding going concern. Please read that note number 23. However, our opinion on the management is that they are financial statement. We don't want to give any kind of modification. The auditor's opinion is not modified. It means what? The auditor feels that everything that the company has disclosed is disclosed properly only. Just that the auditor wants to tell the shareholders, please read note number 23, so that the shareholders get proper knowledge and they can take their buying, selling, holding onto the shares decision, all the decisions they can take. Simple. So that is basically this part here. Tell me, company is a going concern, material uncertainty is also there. In regarding this part, what I just said, if the management has given the disclosure, in that case, the auditor will give a clean report. But the auditor in the auditor's report will also give a note in the material uncertainty in relation to going concern paragraph, and auditor will clearly mention that his opinion is not modified. Not modified. Are you there with me? Yes or no? Comfortable till here? Okay. Second, next one. This is case 2 part A. Okay. Case 2 part B. Going concern is there, material uncertainty is there, and disclosure is not given. Disclosure is not given. It means management is not telling the truth. In that case, the auditor will give a qualified opinion or an adverse opinion, depending on whether the matter is not pervasive or pervasive. If it is not pervasive, qualified opinion. If it is pervasive, then your adverse opinion. Clear? Simple. Next is case 3. Case 3 is what? Management has not done the assessment only. What is the objective of the auditor? Tell me. Question number 3 we did. Tell me. What they say, what we feel, report if any difference is there. Are Baba, but what they say, they should say something. No, if they don't do assessment only. And what they say, we don't know. What we feel a lot of things. Report any difference. What difference will you report here? You cannot report any difference. Correct? So your objective is not met only. In this case, what to do regarding going concern? If they are not doing the assessment, then we don't have the evidence. In this situation, the auditor will give, see this, if it is not pervasive, qualified opinion. If it is pervasive, then disclaimer opinion, because we don't have sufficient appropriate audit evidence regarding this matter. Are you there with me? Yes or no? Simple. That completes a very beautiful standard called going concern. I hope you found it very comfortable. Any queries, please message me in the chat area. Okay, see you.